Welcome all the viewers. Dr. Vijay's lectures on accounting. Lecture number 4. Thank you for your participation till the end. Let us go to slide 1. This lecture is on ledger posting and marking of folio numbers. Posting of journal entries to ledger book was explained in the first lecture itself. Every transaction is posted in the ledger book in two places, in the debit side of one account and in the credit side of another account. For example, the entry purchase account debtor to cash account is to be posted in the debit side of purchase account as to cash account and in the credit side of cash account as by purchase account. Note the symbol capital letter D small r stands for the word debtor, D-E-B-T-O-R, and capital letter A bar small c stands for account. Let us go to slide 2. There is ledger folio column in journal book and journal folio column in ledger book. Ledger folio stands for folio number of the ledger book in which the account is maintained. If cash account is maintained in folio 1 of the ledger book, ledger folio is to be shown in the journal book against cash account as 1. On posting a journal entry affecting cash account, if it is in folio number 3 of the journal book, number 3 is to be marked in the journal folio column of the cash account. Both journal folio column in ledger account and ledger folio column in journal book are filled in the course of ledger posting. Are folio and page the same thing? Not exactly. For recording any accounting statement, say a cash book or ledger account in an A4 size account book, the whole stretch of 2 pages is needed. So, the account books are so numbered that pages 2 and 3 together is the first folio, and pages 4 and 5 together is the second folio, and so on. So, folio is the whole stretch of writing space available on turning a page. Folioing, that is putting folio numbers in both the journal book and the ledger book, is done, as we have seen, in the course of ledger posting. Marking of journal folio and ledger folio numbers are not supposed to be done by students while working out problems in the class or examination, but they may be asked to do it in accounting practical examinations. But it is a must for accountants while maintaining account books of firm. Accounting is nowadays done by machines. Folio numbers are marked automatically on the basis of the data furnished through the vouchers submitted. Now, let us proceed to ledger posting and folioing of the journal entries of Sabu's firm for the period from the time of inheritance to January 14. Journal entries are restated in slides 3 to 6. Each such slide is assumed as a folio of the journal book. Slide 3 is journal folio number 1. Slide 4 is journal folio number 2, like that. Posting of journal entries in ledger accounts are shown in slides 7 to 14. Each such slide is assumed as a folio of the ledger book. Slide 7 is folio number 1 of the ledger book. Slide 8 is folio number 2 of the ledger book, like that. It is journal folio number 1 in slide 3. The opening entry is shown. All assets inherited are debited and all liabilities and capital are credited. So, it is to be posted in the debit side of respective asset accounts and on the credit side of the respective liability accounts and capital account. The practice in ledger posting is showing the name of the corresponding account in the particulars column. In our example of purchase of goods for cash, in purchase account, in the debit side, in particulars column, it will be shown as to cash account. And the cash account credit side particulars column, it will be shown as by purchase account. But that practice cannot be followed in the case of opening entry, as so many accounts having different values are debited and credited. Moreover, it is the values of assets and liabilities brought down from the previous period. It has to come as opening values in all the related accounts in the beginning of the current period. So, in asset accounts, opening entry is posted in the debit side as to balance brought down. In particulars column, to balance brought down is shown. And the liability accounts and in capital account, it is shown on the credit side in particulars column as by balance brought down. For example, in slide 3, folio number 1 of the Sabu's firm, cash account debtor $6,000, bank account debtor $12,000, stock in trade debtor $36,000, Miranda debtor $22,000, furniture account debtor $8,000, to rent dues $9,000, to Rajan Company $15,000, to loan from Asad Bank $14,000, to capital account $46,000. In all the asset accounts from cash to furniture and fittings, posting is to be shown in debit side as to balance brought down. In the journal folio column, number 1 is to be shown because it is from folio 1 of the journal book. In the liability accounts for rent due to loan from Asad Bank, posting is to be shown on the credit side as by balance brought down, and journal folio column 1 is to be shown. In capital account also on the credit side, by balance brought down 46,000, and the journal folio mark 1 is to be given. Look at the opening entry. Here it is ledger folio column. In the ledger folio column, against each account, the folio of the ledger book where the account appears is shown. Cash account and bank account in folio 1 of the ledger book. Stock and trade account, Miranda account in folio 7 of the ledger book. Furniture account in folio 4. Rent dues in 8. Rajan Company in 5. Loan from Asad Bank in 7 and capital account in 5. This kind of marking of ledger folio and journal folio columns enables cross-reference of journal entries and postings very easy. Slide 4 is folio number 2 of the journal book. In all the journal entries given here, wherever the postings come in the ledger account, against the posting in journal folio column, 2 is to be marked. Here, against each account in the journal entry, in the ledger folio column, the folio numbers of the respective ledger accounts are shown. For example, first entry, purchase account debtor to Joji Traders. It is shown in the journal ledger folio column as 2. That is, both these accounts are in page 2 of the ledger book. Second entry, rolling stator to sales in ledger folio column 3 is shown against both the accounts. Means both the accounts are on page 3 of the ledger book. In the next one, bank account debtor to sales, against bank 1 is shown, against sales 3 is shown. Means sales account is in page 3 of the ledger book, but bank account is in page folio 1 of the ledger book. Okay, now let us see some postings. First one, purchase account debtor to Joji Traders. Purchase a goods on credit from Joji Traders. It is to be shown in debit side of purchase account as to Joji Traders. In credit side of Joji Traders as by purchase account. Next is roll-ins to sales. Credit sale of goods to roll-ins. In roll-ins account, we have to show it in debit side to sales. In sales account on credit side as by roll-ins. One more thing I am telling. Bank account debtor to sales. So, in bank account debit side the posting should be to sales. In sales account credit side posting should be by bank. Ledger posting is this easy. Okay. Whatever I have told in the case of slide 4 only I have to tell here also. Anyhow I am telling in brief. This is folio 3 of the ledger book. So for whatever postings of these journal entries is done in ledger book, against the posting in ledger folio, in journal folio column, 3 is to be shown. Here, look in journal book, against each account in the ledger folio column, the folio number of the ledger book where the account is maintained is given. Drawings account is in 6, purchase account 2, cash account in 1, capital account 5, like that. Look at the postings, first 2 entries. Drawings account debtor to purchases. So in drawings account debit side to purchase account, it is posted like that. In drawings account debit side. In purchase account on credit side by drawings. Second entry, cash account debtor to capital account. In cash account debit side, posting is to be done as to capital account 20,000. In capital account credit side, by cash account 20,000. Okay. 6 is folio number 4 of the journal book. The component entries are journalized. Mother Interiors debtor $15,000 to bank account $14,500 to discount received account $500. This is to be posted in 3 accounts: Mother Interiors account, bank account and discount received account. In each account, only whatever amount is shown in the amount column against that account, only that can come. In Mother Interiors account, 15,000 should come. But it will come through 2 postings. In bank account, only 14,500 should come. In discount received account, only 500 should be posted. In Mother Interiors account debit side, let us see how the postings will come. To bank account, 14,500. To discount received, 500. So the total amount posted is 15,000 only. Now, in bank account credit side, how the posting will come? By Mother Interiors, but the amount, be very careful, only 14,500. In discount received account again on credit side, by Mother Interiors, only $500. So, total of the postings on credit side, in bank account credit side 14,500, discount account credit side $500. Total is only 15,000. So the total of the postings in debit side and credit side should not change. It should be 15,000 each. Again I am telling how to post this entry in Mother Interiors account debit side to bank account 14,500 to discount received account 500. In bank account credit side, by Mother Interiors 14,500. In discount received account, by Mother Interiors 500. Now we are going to next entry. Cash account debtor for 19,000. Discount allowed debtor 300 to roll-ins 19,300. In cash account posting should come in debit side, no doubt. Posting should be to roll-ins, only 19,000. Only 19,000, be careful. In discount allowed account debit side again to roll-ins, only 300. Only 300. And in roll-ins account credit side, 2 postings will come. By cash account 19,000, by discount allowed account 300. Against roll-ins, 19,300 is shown. That should come in roll-ins account, but through 2 postings. Cash account, by cash account 9,000, by discount allowed account 300. Okay. Starting ledger posting. Slide number 7 is folio number 1 of the ledger book. This folio contains bank account and cash account. In both bank account and cash account, there is journal folio column. So for each entry, when it is posted, from which page of the journal book the entry is, that is shown in journal folio column. That is the source of the posting is shown in journal folio column. I won't be telling any more regarding folio marking because enough is said. Now in debit side of bank account, there is opening entry posting January 1 to balance product 12,000. Similarly in cash account also January 1 to balance product 6,000 is shown. Regarding this, I should tell something more. Both bank account and cash account, there is opening entry posting in debit side. Bank account is a personal account. Where there is balance in bank account in favor of the firm, that is Sabu's firm, bank account is an asset. Then bank account is to be debited in the opening entry as well as in the posting. Where the account is overdrawn, for business firms, banks usually have overdraft facility, it is a liability. Then bank account is to be credited in the opening entry as well as in the posting. In Sabu's case, there is a balance at bank in favor. So bank account is to be debited. And so the posting comes in debit side. Then all transactions where bank is receiver, that is, money comes to our bank account, it is debited in a bank account. For example, look at the posting in debit side January 72 sales 78,000. Firm bank account is getting 78,000 through sale of goods. Money is sent through account transfer. Now all transactions whereby cash goes out of the bank account, that is bank is giver, then bank account is credited. Look at credit side, cash account January 8, salaries January 10, drawings salary 12, and Mother Interiors January 14. All these are payments made from bank during the period. The rule for personal accounts, debit the receiver and credit the receiver, that is credit the giver, that is followed. In cash account, it is an asset account. All what comes in, wherever cash comes in, it is debited, where cash goes out, it is credited. In cash account debit side, to bank January 8, 9,000, to capital 20,000, to roll-ins 19,000, all these are cash that has come in during the period. 9,000 from bank account, 20,000 additional capital induced by owner, and 9,000 given by roll-ins. On credit side of cash account, there is by wages, that is the expenditure paid in cash. Money has gone out. This folio 2 of the ledger book contains purchase account, Joji traders account, and returns outwards account. Both the postings of two transactions you can see here, so be very careful. In purchase account debit side, Joji traders 42,000. There is a purchase of goods from Joji traders on credit, so entry is purchase account debted to Joji traders. In purchase account comes in debit side to Joji traders. Look at Joji traders account, it comes on credit side by purchase account. Okay. Now again, see, Joji traders returns. We are returning the Joji traders, goods of the value of $700. So it should come in Joji traders account and returns outward account. Entry is Joji traders account debted to returns outward. Look at both accounts. In Joji traders account, to returns outward 700. In returns outwards, by Joji traders 700. There is one more posting here on purchase account credit side, that is by drawings 500. Goods taken by owner for personal use from the firm. Entry is drawings account debted to purchases. So in drawings account posting will come in debit side and purchase account posting will come on credit side. Look, by drawings 500. Slide 9 is folio 3 of the ledger book. Here again you can see postings of 2-3 transactions coming in the same folio. There is sales account, roll-ins account and discount allowed account. Look at sales account. It's an income account, always to be credited. So postings will come only on credit side. Look, January 6 buy roll-ins 20,200. In roll-ins account comes in debit side. To sales account 20,200. Okay. Then roll-ins is returning goods valued $900. Entry is returns inwards account debtor to roll-ins. So in roll-ins account credit side, buy returns inward 900. Okay, then roll-ins is giving us $19,000 in cash in settlement of account. We are having a discount of $300. Compound entry. Look, entry is cash account debtor $19,000, discount allowed debtor $300 because it is loss. To roll-ins 19,300. So postings come on the credit side of roll-ins account. Look there. By cash $19,000, by discount allowed $300. Okay. In cash account the corresponding posting will come in debit side as to roll-ins 19,000. In discount allowed account, which is there, it is here itself. In discount allowed account debit side to roll-ins $300. Okay, the journal entry is roll-ins debtor $19,300 to cash $19,019 to discount allowed $300. Corresponding posting will come in debit side of cash account to roll-ins $19,000 and in discount allowed account to roll-ins $300. Slide 10 is folio 4 of the ledger book. There is furniture and fittings account, Mada interiors account and discount received account. In furniture and fittings account, there is opening balance, that is posting of opening entry to balance brought down $8,000. Further, the firm has bought from Mada Interiors furniture valued $15,000 on credit. So posting is furniture and fittings account debtor to Mada Interiors. Postings comes in debit side of furniture and fittings account to Mada Interiors 15,000 and on the credit side of Mada Interiors buy furniture and fittings 15,000. On January 14, that is 3 days after, Mada Interiors is given 14,500 by the firm. So Mada Interiors allows a discount of $500. So entry. Mada Interiors account debtor $15,000 to bank $14,500 to discount received $500. Mada Interiors account debtor $15,000 because that much amount is owing and it is settled. In bank account credit side only $14,500 should come as I told earlier. By Mada Interiors 14,500. In discount received account on credit side by Mada Interiors only 500. Look at discount received account credit side. This is again posting of compound entry. Slide 7 is folio number 5 of the ledger book. Rajan Company account and capital account are there. In both the accounts there is opening balance on credit side. By balance brought down 15,000 Rajan Company and 46,000 in capital account. There is one more further posting. Sabu owner has brought in cash $20,000 as additional capital. Posting is cash account debtor to capital account. So in cash account deficit it has come, we have seen. In capital account credit side by cash 20,000. Slide 12 is folio number 6 of ledger book. Drawings account, salaries account, wages account. Drawings account represents the owner. Anything taken by the owner from the firm. There are two drawings. One is goods taken for personal use. Entry drawings account debtor to purchases. In drawings account comes in debit side to purchase account 500. Next is cash drawn from bank for personal purpose. Entry drawings account debtor to bank 1,200. So in drawing this account deficit to bank 1,200. Salaries paid 8,000 through check comes in salaries account. Entry is salaries account debit to bank. So in salaries account to bank 8,000. Wages paid for unloading goods 300 in cash. That comes in wages account. Entry is wages account debit to cash. So posting in deficit to cash 300. Is lecture folio number 7 of ledger book, stock and trade account, Miranda account and loan from Asad bank account. Stock and trade account and Miranda account carry opening balance bar forward from previous period. To balance product 36,000 in stock account, opening stock of goods, and Miranda due from him to balance product 22,000 rupees. Loan from Asad bank is a liability. Opening entry posting comes on credit side by balance product 14,000. No other transaction posted in any of these three accounts. Slide 14 is the last folio, folio number 8 of the ledger book. Returns inwards account and rent outstanding account are there. In returns inwards account, the goods returned by Rollins, the posting of that is there. The entry was returns inwards account debtor to Rollins 900. So in returns inwards account deficit to Rollins 900. Rent outstanding for 3 months was there at the beginning. So from opening entry, posting is there in rent outstanding account on credit side. By balance brought down $9,000. Okay, this lecture comes to an end. In the next lecture, we will study about balancing of accounts and preparing trial balance. Thank you for your participation. Please subscribe and click bell button if not done. Like and share maximum. Thanks for your comments.